I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Hello everyone, this is Ask Rob and Rob, the show where you get your questions in and we do our very best to get them answered. Now, there is so much happening in the world right now, and we've got a bit of a mortgage special on this week's Ask, because again, so many mortgage questions are coming in. So we picked two to help you out. But before we get into it, let's give you a reminder of how you can get your question into the show.
Yeah, and how can you not have questions at the moment? Really easy to send them our way. 013 808 00035 is the number to leave us a voicemail, or you can go to propertyhub.net/ask. Once you've done that, your work is done and ours is just beginning. So while you ponder what you want to ask us, let's hear from Lee.
Hi, Rob and Rob. I've been a listener for a fair few years and got myself a couple of properties, and you have answered my question before. But I have a bit of a grey area of some questions that you might have answered previously, but I haven't seen them if you have. So I got my first mortgage 2 years ago, my second mortgage 1 year ago, and they're both locked in 5-year mortgages. And there's a point in the next year that I could benefit getting some money out. I spoke to my mortgage advisor and they advised that I can't get my money out until that term ends, that 5-year term. And of course, by then, I'm not sure what's going to happen to the market, if it'll crash at that point, or I'd be lucky enough to grab money out before it does. And what do you advise in a situation? Am I stuck, or is there a way I could get money out? Now, bear in mind, I have looked at my mortgage contract. It does seem like I'd incur a £3,000 fee or maybe more just to get this term ended. But of course, I don't know if that's what I want to do because I've got a good percentage on my interest at the moment. So yeah, please let me know what you think, what advice you do in a situation. If you have done anything in the past, great help. Thanks very much. And yeah, take it easy.
Lee, thank you for your question. And I think this is a good word of warning for property investors in general. A lot of people over the years have been locking into long-term fixes. And for some people, that is absolutely brilliant. But if you plan to extend your portfolio, it obviously presents challenges, especially if your properties then have income within them because of capital growth. So obviously I don't have a time machine, Lee. We can't go back in time. So I can't help you with that. But hopefully that helps other people who are considering their mortgages right now and their strategies. But what can you do? Well, there's a possibility that you may be able to get something called a further advance. So you need to contact your lender, and you might have to do this direct, and say to them that you want to extend your mortgage further than where it is now on that current property. So let's just say your property is worth 200k and your mortgage is 100k. You may go to them and say, right, I'd like to push that to 150k, please. And then they would give you the 50 difference, hopefully on the same rate and product as well. It can be done. It has been done. I've even done it myself. So there is a possible way forward. It is not guaranteed. If the lender doesn't want to, if they don't agree with your valuation, you are a bit stuck because you have a choice of one. And it's up to them whether they play ball or not. That said, if it's only costing you £3,000 to exit your mortgage, then it might be worth considering exiting early. Now, putting aside all the turmoil that's going on in the world right now, if you just look at this in a normal market, and at some point we'll be in a normal market again, you could go, okay, can I invest my money and get that £3,000 back and some more by making a good investment? And the chances are the answer is going to be yes. You probably can do better than that £3,000. So while you might not want to pay it, that money you could unlock, say 50, 100k, you could make work harder than that penalty over the next few years. So although it's never nice paying an early redemption fee and paying that penalty to get out the mortgage, if it means you can move forward and then financially be better off because of it, it then becomes a very simple decision. It may not be nice paying that fee, but it could serve you. So run the numbers, look at other investments, decide on, okay, where could I put this money into? How strong returns could I get? And based on that, you can make a decision whether it's worth it or not. But before that, try and get the further advance because that might get you there. But as I've alluded to, there's a lot of volatility in the market right now. And Tom has a question on just that.
Hi, Rob and Rob. This is Tom. Got a question about managing the recent changes in the mortgage market. I understand from listening to you recently that you're bullish we're entering a buying opportunity given the market's been softening. And we've also been looking to add to our portfolio as we're generally positive about the potential for capital growth. But we've got quotes on the table of 6 to 7% for mortgages And at these figures, it's really impacting cash flow and making it almost impossible for deals to stack. Just interested to hear your thoughts on how you've been approaching this environment and whether you've had to adapt your strategy at all to make sure you're getting a return. Interested to hear your thoughts. Thanks.
Tom, thank you for asking that question because it's one that so many people will have been asking. I wrote about this recently and also put out a video last week. So definitely go over to our YouTube channel, Property Hub UK, and seek that video out because I go into all this in detail. But the short answer is things have changed a lot over the last couple of months, and I've changed my mind about my approach to mortgages as a result. It was only in the last couple of months that I was saying I'd be fixing for up to 5 years right now, because at the time rates were going up, but they weren't ridiculous, and there was no particular reason to see why they would come back down again. But that's now completely shifted. And as you've said, fixed rates are looking super unappealing. And I go into this in the video, but the reason for that is that fixed rates price in what the markets believe is going to happen over the length of that fix. So at the moment, the markets believe that the base rate is going to go way, way up in order to contain inflation. And so even though that hasn't happened yet, you're paying for it in your rates as if it has. And of course, the benefit of that is that then if rates in fact go up even higher than that, well, then you've locked it in at the current rate. Even if you don't like the current rate, at least you've got certainty. But I happen to believe that now is the time for flexibility, because with variable rate mortgages, you're paying based on the situation as it is today. Future projections don't matter because the lender can change the rate that they're charging you whenever they feel like it. So at the moment, I'm favouring flexibility and variable rates because while it's nice to have the security of a fixed rate, I believe those fixed rates are going to come down in price. Of course, this is all just my opinion. Very possible that I'm going to end up being wrong, and I'm willing to deal with the financial consequences of being wrong if I am. Your situation could be completely different, and you should always speak to a mortgage broker about this kind of stuff. But you asked about our approach, and that's mine at least. So hope, Tom, you found that useful, and do check out that video.
Yes, and while you're checking out the video, make sure you subscribe to the channel because we are churning out so much on the Property Hub YouTube channel at the moment. It is a fantastic resource for all people interested in property. So that's Property Hub UK. Search for that, subscribe, and watch that video. And make sure you join us on Thursday for the podcast because, as we talked about, so much happening in the world right now. We'll keep you up to date, we'll keep you informed, and hopefully give some common sense noise in a world that's got a lot of crazy noise right now. So we'll be back on Thursday. We'll see you then. Take care. Have fun. Bye-bye.
Bye-bye.